So now started. What happened? You need a break? So we will quickly have this till 31. You have theory only. So just to make you understand what is rule 27, I have taken some few examples from final. So we will have a look, because tomorrow if any questions come, ask for rule. At least remember those examples. So you will get some idea what to present for theory related area also. So we will see for rule 27 to 31. So value of supplies involving non-monetary consideration or related parties. So this is what there in our material. So we'll see here. We are in rule 27. So first we have to see whether in the problem open market value you are able to find. Second one, what is the monetary consideration and what is the value of non-monetary consideration, and what is but still you need to, first step is you need to see the open market value. If open market value you are not able to find, next step you need to go to what is the monetary consideration if anything is given in the problem, and the value of non-monetary consideration. So even if that also you are not able to find, then you have to go next level. What is the value of supply, like, kind and quality? So is there any similar material where you can able to find the price? So that is the third step. In the fourth step, the if all these three steps is not working, so fourth step you are trying, which is monetary consideration plus non-monetary consideration, that is computed on the basis of 110% of cost of supply or by other reasonable means. So we'll see with simple example of this one by one step, so you will understand what rule 27 says. So we have seen open market value. So what is open market value? We have seen with this 3-4 examples. Now we are into this for second one, monetary consideration plus non-monetary value, that is money value of non-monetary consideration. What does it mean? So this is the theoretical in our material, but you need to see what does non-monetary, monetary, right? So where we can see, because this is given in our final material, we'll see this example. X Limited is a supplier of security services, provided such services to Y Limited. As per the contract, Y Limited is to pay monthly 1 lakh. In the month of November, Y Limited supplied uniforms to all employees by spending 20,000. So this is the non-monetary consideration. In your invoice, you are not getting that 20,000. Instead, you are giving the uniform to all your the securities. As a result, X Limited raised the bill for 80,000 in the month of November. In the given case, X Limited received consideration for security service is partially in terms of money 80,000 and partially in kind, that is uniforms. So the consideration is partially in 80,000 you are getting and partially the uniform you are getting it. So find the taxable value of service on which GST will be levied. It is not on 80,000, it is 80,000 plus 20,000, so 1 lakh you need to pay GST. So this is in the rule 27, we are into this monetary consideration plus money value of non-monetary consideration. So this why we are saying even though there is a non-monetary, the uniform you are giving to the securities still has to be considered. So the now third one, value of supply, like, kind and quality. So what is like, kind and quality? So there is one more example for the same. Our academy, this is for that non-monetary consideration. I missed to share this example. This is also very easy one. Our academy normally charge 10,000 for teaching commerce students. A merit student approaches the management of our academy and narrates his financial position. Our academy management, considering his financial position, agrees to charge only 5,000 from such student. Find the value of taxable supply of services. So see this previous two example. This we are saying 80,000 you are as per the agreed in the invoice you are raising 80,000, and partially in kind means uniform. But in this particular illustration, when GST that you are finding the transaction value of supply, it should not be on 10,000, it should be on 5,000 only. So you should understand the two things, what is there, because there it is a non-monetary consideration is there, but here it is not. Because of the financial problem, the academy is collecting only 5,000 instead of 10,000. So in this scenario, your transaction value should be price is the sole consideration of value of supply. So you need to apply that and see the transaction value should be 5,000. So like even in the customs also we have seen the like, kind and quality. What should be the value of like, kind and quality? So the exactly the meaning you can understand here. So I'll show the example what is the meaning of like, kind and quality. So first one you can see the R Academy teaching or coaching budding CMA's tuition fee of our academy can be compared with another academy of same kind and nature. So if our institute is if they are doing the coaching class, if they want to find the transaction value of the academy, the institute, then the department should compare with the other institute only and not with the home tuition of a faculty who is taking class for 4th standard. So like, kind and quality means you always needs to compare. If this is the institute of CMA coaching academy, so then they have to compare the other coaching academy of CMA to that level only. They should not go and see the primary school education. So that is the meaning of value of supply, like, kind and quality. The goods or services, same kind and quality, identical or similar nature, similar circumstances, comparison of various factors and so on. So you can one more also, feather light chairs price compare with identical or similar nature product. So if we want to compare the chairs, so we have to see the comparison with the other company products of similar kind and quality only. So above, below are the similar type only. So we have seen all these rule in the rule 27. We have seen what is open market value, money consideration, value of like, kind and quality. So now we are into the last one. So if all these three did not work, how to calculate the transaction value? So we have to go with the last one, fourth step. So what is the fourth one? based on the cost as per rule 30. So if this is not working, so we have to go as per rule 30, value of supply of goods or services, the value shall be 110% of cost of production or manufacture, or the cost of acquisition of such goods or cost of provision of services. So this is nothing, our cost sheet only. So if you are not able to find the transaction value of supply, in that scenario you have to follow this method. So open market value also did not work, monetary or non-monetary consideration not working, value of like, kind and quality also not working. So then you have to go with the last step. So last step is you need to follow as per rule 30. So what it is like a cost sheet only. You can have a look what is that 110% is. So you know the direct material, wages, direct expense, indirect materials, factory overhead, administrative, selling, distribution, quality control. So how you prepare cost sheet? Same way you are finally you are calculating the cost of production. On this value of cost of production, 110% you need to calculate. So it comes to 145. So that 145 needs to be added. You will get the value of taxable supply of goods. So in this value, then we have to pay the GST. So these rules are nothing but when you are struggling to find what is the transaction value, so which value to be considered, or how you need to calculate the taxable value of supply. So that is the purpose of these rules. So now rule 27, you got some idea what is rule 27 is. So 28 is also, it is like a similar only. Value of supply of goods or services or both between distinct or related persons, then we should go with rule 28. So we have rule 28, 29, 30. 30 it is a cost sheet. You need to remember, if they say you need to calculate the transaction value as per rule 30 means how you prepare the cost sheet. Same way you need to prepare. The very important one in rule 30 is 110%. So that is why the 10% profit margin you have to directly add in the cost of production, and you will get the value of taxable supply of goods. So this is rule 27. So rule 28, 29 is also similar. Time being, I am moving on to rule 31 because it is some interesting compared to these rules. So we will have a look, then after some half an hour we will come to rule 28. So now I am moving on to the rule 31. Sorry, rule 32. So you can have a look on this rule 32. These are special valuation methods for these supplies, these 5 supplies. The special valuation methods for 5 supplies. So you can, it is the same. Lottery, betting, certain specific cases like insurance, air travel, pure agent, rate of exchange. So this is very interesting one. So we will have a look, then we will complete what is rule 28 and 29. So we will first see in case of lottery, betting, how we have to calculate the transaction value of supply. So we are into this first one, purchase, or sorry, not on this. Yes, it's there in my slide. So now you need to remember all these rules. So we will start with this lottery, betting, gambling and horse racing. So how we will, if the business is related to, you are doing any lottery, betting, gambling, these things, then how you will be calculating the taxable value of supply. So it is there in our material also. This is just the summary. We can have a look on this. Value of supply in case of lottery, betting, gambling and horse racing. So if we are doing this types of business, in that scenario, how we will be calculating the transaction value. So how we have to calculate? The supply of lottery run by state government, or if it is authorized by the state government, in that case higher of the two amounts, 100 by 128 of the face value of ticket or 100 by 128 of the price as notified by the official gazette by the organizing state. Then supply of actionable claim in the form of chance to win in betting, gambling or horse racing in a race club. In that case 100% of the face value of the bet or the amount paid into totalizator. So we'll see for the example what is there in our material. Only one, even in final also it's not much, there are only one or two are there. So the state government authorize a lottery whose particulars are as under. So we have the face value as per ticket. So it's there in our study material, same one it is. The face value per ticket is 1000 and the price notified by the official gazette 600. Compute the value of supply. How shall your answer differ if the price mentioned is 1050 instead of 600? So now we know it, what is the thumb rule for calculating for the value of supply in case of lottery, betting. So it is state government authorize a lottery and the face value per ticket is 1000. So we are going back 100 by 128 of the face value of the ticket or the price notified in the official gazette. So you need to calculate here. So it is 781, right? How much? When it's matching, right? Yes. So 600 into 100 divide, you are able to see here that 1050, 600 you need to take, and here the face value is 1000. So why we are taking 1000 instead of 600? Yes, the 100 by 128 of the it is, we need to always consider the amount authorized by the state government here. This is notified by the official gazette. So here if you see 1000 is the face value per ticket. So that's why you have to take this 1000 and not the one. Okay, you are saying 1000 or 600, whichever is higher. Okay, fine. So 1000 or 100, whichever, 600, whichever is higher, and here also the 600 into 100 divided by 128, and this is 1050. The value of supply being higher of the above, we need to consider here. So very simple problem in the which one? So in that 781 or 820, this one you need to calculate. There are two things we need to find, right? So one is 1050, the other one is for 600. So you need to compare for the both one. So now we'll go one by one with the section 32, the value of supply of services, that is purchase or sale of foreign currency, including money changing rule. So when if suppose if we want to travel abroad, so suppose if we go and exchange our currencies to USD, or person coming here and if he wants to exchange USD to INR, so that is cross currencies. So in that scenario, how you will calculate the transaction value of supply? So compared to this, you can have a look. So it looks, it is visible, right? So now we are in which scenario? You remember this? These are the special valuation methods for 5 supplies. One is purchase or sale of foreign currency, including money changing. So now we are into this purchase or sale of foreign currency, including money changing. So instead of this, you can have a look on this chart. It will be very easy one. It is related to money exchange service. So under money exchange service, we have options. So suppose tomorrow if I do this type of services, I get an option whether I can follow rule 32(2)(a) or rule 32(2)(b). So if I first one is if I opt for rule 32(2)(a), so para subsection 2 para A, then I will come across 3 different scenarios, 3 different cases. So what is the first case? So this needs to be remembered. So these are like a thumb rule. What is the services you are providing? If this is the particular service, then you need to follow this rule. If you are following rule 32(2)(a), then you have 3 cases. The first case, actual exchange rate is given if it is 62. Then if you have RBI exchange rate, then what is the difference? Then you will get the taxable supply. Then you need to from that you need to derive the taxable supply. So this case 1, if it is clear, like exchange rate is 62, RBI 61, difference, and for what value you are exchanging. If it is 1 lakh and the taxable supply is 1 lakh, right? So you are exchanging 1 lakh USD. So your taxable supply is 1 lakh. So if we have the similar example, we can have a look. So see here our study material problem. You can refer 32(2) in our study material. The difference between the buying rate or the selling rate and the RBI reference rate for that currency at that time multiply by total units of currency. However, RBI reference rate is not available. The value shall be 1% of the gross amount of Indian rupees or provided or received by the person changing the money. So you can have a look if you are still not able to understand what is case 1, how we have to calculate taxable value of supply. We'll go slowly here. You can see the US dollar 100 sold by a customer at a rate 78 per US dollar. So the US dollar is $100 he is selling to a customer or sold by a customer at a rate 78 per US dollar. The RBI reference rate is 77. The taxable value shall be, so you know it, actual. So what is the case 1 formula? Actual exchange rate minus RBI exchange rate. So what is the difference here? 78 is the actual and 77 is the RBI exchange rate. The difference is 1. So on the US dollar, for how much he is exchanging? 1 into 100, it is 100 will be your taxable value. So this is the case 1. So this is the case 1 here. Now we are into case 2. If no RBI reference rate, in that scenario, how we have to calculate the taxable value? So the actual exchange rate, here directly given the numbers, but you can write as per your understanding. The actual exchange rate is 62 and the US dollar, for how much we are exchanging, it is for 1 lakh. So if RBI rate is not there, directly 1 lakh into 62, your 1%, it is right, 1%. Wait, we'll see here. Value of supply, 1% of the lesser of the two amounts. The person changing the money would have received by converting any of the two currencies into Indian rupee on that day at RBI reference rate. So sorry, this one you don't refer, we need to refer this one. Where the RBI reference rate for a currency is not available, the value shall be 1% of the gross amount of Indian rupees provided or received by the person changing the money. So you need to refer this one for if RBI exchange rate is not there. So what is the taxable supply? 1% of the gross amount of Indian rupees. So in this table, we are finding how much? 62 into 1 lakh. So you will get 62 lakhs. On 62 lakhs, calculate 1%, which is 62,000. This is the taxable value of supply if RBI reference rate is not there. Now in the next case, so that in the case 3 is cross currency. So cross currency, do we have example here? This one you can have a look for cross currency, because other things you may get confused. So cross currency means you have USD 1 lakh, the USD 1 lakh you have, the 1 lakh USD you want to convert into UK and not INR. You have 1 lakh USD that you want to convert into UK. So the exchange rate, so how we need to calculate? So that is the case 3 cross currency. I will take you to the example. Here you can understand easily. Royal Finance Corporation, located in Mumbai, a money exchanger, provided the following service in the month of February 24 to Infosys Bangalore. The US dollar 1000 is exchanged into UK pound 571. So the RBI reference rate at that time, US dollar is 71 and UK pound is 95. So you have cross the currency for US dollar and UK pound. So 1 minute, I will go back to this structure here. So it is for the case 3 cross currency. So how we need to calculate? First step will be US dollar, how much? 1000. And what is the INR exchange rate? Which is 71. So 1000 into 71, 71,000. Next step is UK pound, 571 into 95. How much it comes? 54,000. So whichever is less, you need to calculate whichever is less. 54,000. On 54,000, the taxable value is, you have to restrict to 1%, so it is 543. On that, not CGST, SGST, it is both are cross currencies, so directly IGST 18%. So not CGST as SGST applicable in case of cross currencies. So these are like a formula you need to remember, no option here. So where none of the currency exchanged in INR. Now you have a look on the study material. So we are seeing all these three scenarios. So first one is where you got the RBI exchange rate. Second scenario where you don't have no RBI exchange rate. Third scenario, it is a cross currency. None of the currency exchanged in INR. In that case, 1% of the lesser of two amounts, person changing the money would have been received by converting any of the two currencies into Indian rupee on that day at RBI reference rate. So if you read this, it will be very difficult to understand. So see this, I will repeat this three scenarios again. So now we are looking into certain specific supplies. Under certain specific supplies, we have 5 major heads. What are the 5 major heads? Suppose if you are doing any business of purchase or sale of foreign currencies, including money changing, in that case, how you will be calculating GST? And there are other 4 are there. Now we are focusing only on purchasing or sale of foreign currency, including money changing. So now we will see, we are seeing in that there are 2 rules. 2 rules means it is at the option. At the option means if you are doing this type of services, you can go and opt for 32(2)(a), or if you are doing, it is your preference only. You can go with 2A or 2B. So if you there is one particular rule also. Suppose in any of the financial year, if you are saying that I will go with the rule 32(2)(a), in the middle of the year you will not be able to change unless the complete financial year is completed. So in the middle you will not be able to change. So these are only thumb rule, or you can say it is formula only. So if you are doing this money changing, the service of foreign currency money changing services, and if you are opting to the rule of 32(2) para A, then we have 3 different scenarios. One where the RBI reference rate is given, how we have to calculate taxable value of supply. Number 2, where RBI exchange rate is not given. Number 3, cross currency. So the currency you will not require in INR. So you can also have, if you are not comfortable with this table, you can have a look on our study material. So please you can go to this 32 subsection 2. So first scenario is difference between buying rate or the selling rate and the RBI reference rate. So you can have a look on this first illustration, which is similar to that one. So US dollar 100 sold by customer at a rate of 78. So RBI reference rate is 77. So difference between the actual rate minus RBI reference rate multiply by the total units sold. So it is 100. So this is case 1. Case 2 is RBI reference rate not available. In that case, the value shall be 1% of the gross amount of Indian rupees provided or received by the person changing the money. So you can have a look on the same. 90,000 is exchanged into GBP and the exchange rate is rupees 90, thereby giving GBP 1000. So the RBI reference rate for that day is 89. The taxable value shall be 1000, and if RBI reference rate is not available, in that scenario 1%. How one? In this example you are seeing two things. One is RBI reference rate is applicable. In that case, what is your taxable value of supply? If RBI reference rate is not there, then what is the taxable value of supply? So shall we try this problem? You want me to open Excel and we'll see? So we will see, because these are the specific ones are very important. So what is the problem here? So the GBP is 1000 and the exchange rate offered is 90. So you can see the GBP here is 1000 and the actual rate is 90, and RBI exchange rate is also given in the problem. So less RBI exchange rate. So what is the RBI exchange rate given? Reference rate 89. So go with that 89, and what is the difference here? 90 minus 89, 1, and the taxable value of supply, how we will be calculating? Which is 1 into 1000. So in case if the RBI reference rate is given. So if now the second rule is if RBI exchange rate is not given. So RBI exchange rate is not there. So in that case, so read it carefully. The value shall be 1% of the gross amount of Indian rupees. So here 1% of gross amount of Indian rupees. So what? 90,000 into 1%. So in that case your taxable value of supply is 900. So you need to understand two different scenarios here. So if the taxable value is given, RBI reference rate is given, it is 1000, and if you don't get RBI reference rate, then your taxable value of supply is 900. So this is the same which you are seeing in this case 1 and case 2. Understand? So now we are into case 3. So any doubt, please let me know. Now we are into case 3. So for case 3, any example? No, actually here in our material there is no example. So if you want to understand this when none of the currency exchanged in INR. So please listen this one, because there is no example in Inter for the third scenario. But if you want to understand clearly what is the provision here, 1% of the lesser of two amounts, the person changing the money would have received by converting any of the two currencies into Indian rupees. So this is the line which is there. So from this it will be very difficult to understand. So I will show you the problem, then you will be able to understand. This is related to case 3, cross currency. Royal Financial Corporation, I'll take Royal Financial Corporation located in Mumbai, a money exchanger, provided the following service in the month of February 24. Now we are in case 3, cross currency. US dollar 1000 is changed into UK 571. RBI reference rate for that currency at that time. So what is our if it is for cross currency, what we need to do? 1% of the lesser of two amounts, the person changing the money. So now please see it. I am taking into Excel. Which two currencies are getting he is changing? One is USD and the other one is UK, right? So USD how much? 1000 and UK is 571.4286, right? So now what is our next step? Next step is we need to convert both into INR, because we have given the RBI reference rate. So it is dollar is 71, the other one is for 95. It is converted to INR now. So how much is the? It is 571. So 1000 into 71 and this. So whichever is less. So whichever is less here, so UK is less, which is 54,285. So what is our formula here in this? When none of the currency exchanged in INR, 1% of the lesser of two amounts. So you need to take 1% of UK. So because this is the lesser of the both the one. So here 1% is how much? 542. So now on this is your taxable value of supply. On this you need to calculate GST, taxable value of supply. So what is your taxable value of supply in case 3, which is 542. Now on this, why we are considering IGST? Because both the currencies are cross currencies, none are INR. They have converted. So on this into 18%. So it is 97. So ours is 97.71. So they have considered it as a 98. Fine. So this is the 3 scenarios. Since it is not there in this, this last one is not there in our final. So just for our understanding, we are working on these 3 different scenarios now. So this 32 2A is clear, right? All these three different one. Now we are going into the option of 32 2B. So now we will see what is there in 32 2B. So 32 2B, here if you go as per what is there in our material, you can have a look. Gross amount of currency exchanged up to, these are like slab rates. So up to 1 lakh means 1% of the gross amount of currency exchanged, or 250, whichever is higher. And the gross amount of currency exceed 1 lakh, not exceed 10 lakh, then in that case 1000 plus 0.5% of the gross amount currency exchanged in excess of 1 lakh. And the last scenario, gross amount of currency exchanged exceeds 10 lakhs. If it exceeds 10 lakhs, then you have to follow as per 5500 plus 0.1 percentage. So this slab rates, option needs to remember this slab rates. So if you want to still more clarity on this, what is this amount exchanged, how we are going to calculate, I have one illustration, you can try. So see this illustration here. X Private Limited, a money changer, exchanged $10,000 to Indian rupees 74, and he wants to supply. See this question, if you want to follow 32 2A, there will be definitely in the question also, you please calculate as per 32 2A. If it is not there, then 32 2B they will give in the problem directly. So you need to be very careful in that section also. So now you tell me, from this material you have the workings, right? The slab rates. If the foreign currency when you exchanged, if it is exceeding 1 lakh, there is 1000 or 250, whichever is higher. Same way here, how much it is? A money changer exchanged $10,000 to Indian rupees at 74 rupees per dollar. X Private Limited wants to value supply in accordance with the rule 32 2B. Determine the value of supply. So how we will be calculating this? Tell me. So first option is what? 10,000 into 74, right? 7,40,000. So what in this category, in which one we are following? Exceeding 1 lakh and up to 10 lakh category. So exceeding 1 lakh, what is the formula? 1000 plus 0.5 percentage. This 0.5 percentage is on which value? The gross amount of currency exchanged minus 1 lakh. It is like our direct tax, how you are calculating the slab rates, like 5%, 10%, 25%, same way. So the gross amount of currency exchanged minus 1 lakh. So we'll see quickly, it is only take 1 minute to work. So if I change to slide mode and this, no, it takes time. So how much? US dollar is 1000. 10,000 it is. Okay, 10,000 and it is 74. So what is the FX rate is 74. So how much it comes? 10,000 into 74. So 74 means 1000. So our taxable value of supply 1000 is there. And again, how we need to calculate? 7,40,000 minus 1 lakh. Okay, so it is there in the slab. So 7 gross amount of currency exchanged minus 1 lakh. So it is 6,40,000. So 6,40,000 into 0.5 percentage it is. So it comes 3,200. So your taxable value of supply is how much now? 4,200. That's all. So 32(2)(b) is very simple, but you need to be remember this calculation. Okay. So 4,200. So you can have a look on this problem now. Right. So we have seen out of this five specific valuation methods, we have seen this purchase or sale of foreign currency including money changing. So in this we have two options, 32(2)(a) and 32(2)(b). 32(2)(a) is, there are three cases. So where RBI reference rate given, RBI reference rate not given, and cross currency. And another option is 32(2)(b). So 32(2)(b), we have that slab rate, and you need to remember this percentage. So the gross currency up to 1 lakh, this one. Yes, yes. So it is not mentioned over there. It is given option 2 there, but in the final you can have a look what is 32(2)(a) and 32(2)(b). Got it? So now this is completed. Now we are going into the next one, booking of tickets for air travel by an travel agent. Okay, so these are very simple only. So if you study now, it will be very easy, and you only for revision you can again open this. So what is the value of supply of services, booking of tickets by travel, booking of tickets for travel by air by an air travel agent. So the deemed supply of services for travel by air provided by air travel agent. So if I am running an air by air travel, acting as an agent for any air travel bookings, then in that case what will be my taxable supply of service? So for every flight ticket booking, you have multiple travel agents. So for that, if you are tomorrow going to own any agency services, so in that case, how you will calculate your taxable value of supply? So in that case, there are two. How we have seen for the previous one for foreign currency, here also two are there. In case of domestic booking, in case of international booking. What is the value of supply? 5% of basic fare, 10% of basic fare. So basic fare means what? Part of airfare on which commission is normally paid to the travel agent by the airlines. Okay. So when you see the problem, you will know what is that basic airfare. But for now, time being, you see that it is a commission normally paid to travel agent by the airlines. So it is the same. For domestic means 5% of basic fare, international means it is 10% of basic fare. Basic fare means commission normally paid to the travel agent by the airlines. So the same illustration and one more from final also I will share. So we can have a look on these two examples. Mr. Ram is a travel agent. The following particulars are furnished by him. So what is the domestic bookings basic fare? 1 lakh and international 3 lakhs. Other charges and fees are there, 5,000 and 20,000. There are taxes also, 4,000 and 15,000. The total ticket value is this much. So when you book your flight, generally you will be seeing this is the ticket value. So other charges he will add, and what is the taxes and the ticket value, you will finally get it. So now the airlines when paying to this travel agent, so if you see, now we will be calculating here the value of supply of services. So in relation to booking of tickets, travel by air provided by an air travel agent. So how much, what is his taxable value of supply? So basic fare we have 1,000. So 1 lakh. And for domestic booking means we have seen here how much, 5% of basic fare. So 5%, 5,000. You should not consider when we are calculating the taxable value, this other charges and all, directly the basic fare, on basic fare 5%, for domestic, international it is on basic fare 10%. So his taxable value of supply is 35,000. So very simple one. Okay. So even I think in final also we have the same. I'll just see if anything I get from the previous year's questions. And so out of this 5, so we have 5 main supplies, specific supplies. Out of that 5 we have completed 2. We will see this life insurance business. So the life, after this life insurance we have value of supply of second hand goods, and the last one is redeemable vouchers. So now we will see life insurance business. So have a look, this is 32(4) subsection 4. We are into life insurance business. Be careful in this life insurance business, because these are some repeated questions are there. Where the policy have futures, the value of supply of services in relation to life insurance business. Policy have features of investment, and such an amount is intimated to the policy holder at the time of supply of service. The gross premium charged from a policy holder less the amount allocated for investment or savings on behalf of the policy holder. So see, this is like a case for like the currency related. Same way, if you see, you can if you are finding easy, you can go with this, or you can go with this chart also. So the premium for any insurance related, we pay premium. So the premium we have, there are 2 bifurcations in the premium. This premium covers only risk. So when we pay premium for any insurance related, the premium amount has multiple components. Like the premium will have, this is only for risk, or it is certain percentage they consider for risk, certain percentage they consider for savings. So the certain percentage they take it for their like an fee, other charges. So when you make premium, you have to see whether the premium covers risk plus savings, or premium covers only risk. So these are the 2 divisions in the life insurance services. So if the premium covers risk plus savings, there is one more option. The amount allocated for saving intimated to the policy holders at the time of providing service. So if the premium is having risk plus savings, if the saving portion is there, whether that has been intimated to the policy holders at the time of providing the service, that is important. Whether the saving intimated to the policy holders. If it is intimated to the policy holders, then gross premium less savings, net premium. So on net premium, GST is payable. If not intimated at the time of providing service, so there are two things. One is 25% of the first year premium is taxable, and then 12.5% of subsequent premium is taxable. So these are the two one which is repetitively asked in the questions, previous year's questions. So you need to be focused on these two areas. And the other one is single premium annuity, 10% of the premium is the taxable value. So this one is a common one, single premium annuity, 10% of the premium is taxable value. But if you see our things, these are the common questions are from these two. Gross premium, that is if it is intimated to the policy holders that your premium amount not only covers risk, it also covers savings also. In that case, if it is intimated, then you should go with this option. If not intimated, then we need to go as per this. So very simple only. If you see the problems, you may find still easy. Then premium covers only risk. So whatever you are collecting the premium against the insurance, if it is covers only risk, directly pay GST 18% on the gross premium amount. The problem here is only, so some Pratik, this chart which you are seeing is from final, but you can refer 32 to 34, 32 4. Which page number it is? You have? No? So just a minute, I can tell you the page number. From the study material, I can share the page number. Yes, page number is 133. So you may refer study material page number 133. So this now you have a look on this. You have referred now this chart, right? This chart is very simple. If your premium covers a risk, and if your premium covers only risk, if your premium covers risk plus savings. So you can go back and you can have a look on what is there in your material also. The gross premium charged and the amount allocated. So it is given on the just a summary level. So if you want to very clearly understand, refer this one, our the final material. It will be very easy one. So the premium covers risk plus savings. So the amount allocated for saving, if intimated to the policy holders, we have to go with this option. If not, we have to go with this second option, 12.5. So if you have received the agent who collects the premium from you, So they conveyed you that sir, this premium is not only risk, it also have the savings of 2%, 5% are there. So if the intimation is provided by the agent, insurance company to you, then we have to go with this option now. So you got information from the insurance company, the premium amount is paying by you not only covers risk, it also includes some savings. So in that case, we then the insurance company will pay calculate the taxable value of supply as per that. Then we have to go with 25% of the first year premium. So I will show with the example. So then it will be, you find easy. So we will see this example now. The same one what we have seen here in that example way. This insurance company started its operation 25-26. During the year has charged gross premium 180 lakhs. So the premium is 180 lakhs from the policy holders, out of which 100 lakhs allocated for investment on behalf of the policy. That investment is the savings. So out of 180 gross premium, they have 100 lakhs allocated for investment. So that is called the savings. So so then future they may ask, there is a policy for other things, you have savings in your premium amount this much, so would you like to take any other insurance policies? So they may come back in that way. So compute GST liability, section 32(4). So if the amount allocated for investment intimated to policy holders at the time of providing service. So what we have to do? So gross premium less savings, net premium. So on the net premium, GST 18%. So this is the same in the material as well. You can refer gross premium charged from policy holder less the amount allocated for investment or savings on behalf of the policy holder. That is the first point we are covering. So if the amount allocated for investment intimated, so you got for the first thing, right? So the next one is, if the amount allocated not intimated at the time of providing service. So second option where we have to see, that is 25% of the first year premium is taxable. So it is, they have not conveyed that there is a they have shared something for allocated for investment also. In that case 180 lakhs. So 180 lakhs is the gross premium on that 25%. So what is the 25%? It comes to 45 lakhs. On 45 lakhs, 18% GST is the tax. So the taxable value of supply is what? Directly 180 lakhs, because they have not intimated. So not intimated means your gross premium of 180 lakhs into 25%. So that is in the material also, for the first year 25% of the premium charged from the policy holder, then subsequent years there is a 12.5. So the last one, if the gross premium charged from policy holders only towards a risk, if it is only towards a risk, then what is our formula? Pay GST 18% on the gross premium. That means directly 180 lakhs. So this is related to the insurance. So very simple, don't ignore any of the topics. You can easily spend some half an hour just to revise. These are the specific one. Huh? 32? This everything is section 32 only, yes. So in the 32, we have these subsections, yes. Not 32, 2, 3, 4, not AB. 32 subsection 2, 32 subsection 2, and 32, now we are in this insurances, 32 subsection 4. AB you are referring is that foreign exchange, that money changing services. That is 32 subsection 2. So in 32 subsection 2 AB, okay. 32 3 1 is the previous one which we have seen is the air travel agent. This is 32 3. 4 is the insurance. Now we will see this, you are clear, right? So there is one more also you can easily solve for the insurance same. You are required, this is the life insurance of India provides you the following for the month of April. So you are, I will share this question, you can try this once, okay. Or we can see this problem now. So it's okay, we will see this problem. LIC of India provides you the following information for the month of April. You are required to compute GST payable if the company has opted to pay GST as per rule 32(4). General policies, only risk cover policies. See, they have two policies. General policies, the total premium collected 12,000 lakhs. First year premium is 5,000 lakhs. And only risk cover is 500 lakhs. Variable insurance policies 800 lakhs. On that 80% allocated for investment. Policy holder is given separate breakup in the premium receipt. So only LIC of India, they have three different premiums policies are there. So you can have a look here for the general policies. So what is the first year premium? The total premium amount is how much here? 12,000. Out of 12,000, first year premium is how much? 12,000, okay. So 12,000 lakh, first year premium is 5,000 lakhs. So the 5,000 lakhs, so they have not intimate, there is no saving allocations are there. So first year premium, we know it is 25%. So 25% on 5,000, and for the remaining year, for out of 12,000 minus 5,000, how much is there? 7,000. So on 7,000 we have 12.5%. So the second year premium also we have seen it. Then risk cover policy, only risk cover. So only risk cover means you need to consider directly the entire number. So 500. Then the next one is variable insurance policies. Out of 8,000 lakhs, 80% allocated for investment means how much amount you need to calculate GST? 8,000 minus 80% of 8,000 is how much? 6,400. So you have 1,600. So the taxable value of supply is 4,000, because if you see here, we have general policies, only risk cover policies, and here variable insurance policies. So there are three different policies. So you are calculating three different policies taxable value. So the taxable value of supply of service is 24,225. On that you need to calculate GST. So you got it? See, easy one, right? So here when you see this way, no, you will find something so theoretical, and you may not feel that concentration or interest. So if you see from the example and compare this, then it will be easy for you. Okay. So the first year we have seen in this problem 25%, subsequent year 12.5%. So this is 32.4. Now we will go to 32.5. So buying and selling of second hand goods. We'll continue this now. Easy and interesting one. We'll continue. See, it is related to buying and selling of second hand goods, where a taxable supply is provided by a person dealing in buying and selling of second hand goods. I'll show you. This will be, this you can see, read this one. Goods repossessed from the defaulting borrower who is not registered. You can see from here 32.5, buying and selling of second hand goods. Goods repossessed from defaulting borrower who is not registered. So yes, then you have to go purchase value. There are two things. One is, yes, he is a defaulting borrower. Yes means you have to follow this one. Purchase value less 5% of the quarter, 5% per quarter from the date of purchase to the date of disposal. Purchase price of the borrower. So the GST will be levied on the margin. So with the example also I will show you. Now you see what is just the concept slightly. The goods repossessed from a defaulting borrower who is not a registered person. That means he is not a default person only. No. So in that case, if the person avails ITC, so yes, then sales value is the transaction value. If no ITC is availed, sales value less purchase value on the margin, GST will be levied. So this concepts we will see the examples and try to understand this one. So this is the example in the material. Mrs. Hariharan is a dealer of old car and engaged in purchase and sale of old cars in Bihar and furnishes the details of the following transactions. See here, first one is purchased old car 80,000 and sold for 1,20,000 in Bihar. So GST applicable on what value? He purchased the old car for 80,000 and sold for 1,20,000. That means he earns a profit of 40,000. So on 40,000, then he will pay the tax. This is the first case. So sale value less purchase value and margin. On the margin the GST will be calculated. Okay. So this is the first thing. Second one, purchased old car 75,000 and sold for 65,000. So you purchased this for 75 and you sold for 65, means you get negative margin. On negative margin, no GST. And purchased old car 90,000 but unable to sell during the month. So for the month, no GST. We don't know what is the sales value. Okay. So now last case, purchased old car 1 lakh and sold for 1,30,000 in Orissa. Why they have given this? Because you should not say, you should not show it under CGST, SGST. If it is Orissa, then IGST. Because 1 lakh and 1,30,000, you get a margin of 30,000. So for the 30,000 CIGST is applicable. You can give the remarks. You can show what is the taxable value of supply. So in that material, if you see here, of second hand goods, used goods after such minor processing which does not change the nature of goods, and where no ITC availed on purchase of such goods, then the value shall be difference between the selling price and purchase price. Where the supply is negative, it shall be ignored. So if you see from this way, no, it will be still you will find easy here. Ram and Co., a car dealer dealing in second hand cars. Ram and Co. purchases used car from Mr. Raja and sells the very same car to Miss Rani after water wash and painting. The purchase price is 2 lakhs and the sale price is 2,50,000. Now what is the GST liability? So what is the purchase price? It is 2 lakhs and the sale price is 2,50,000. So the margin here, how much he gets? 50,000. How much? So 50,000. So on 50,000 CGST, SGST. Okay. So GST they have given 28. If they give 28, 14% CGST, 14% SGST. What happened? And 28% means you can, when you show, you have to show CGST, SGST 14%. Fine. So now in the same question itself, whether your answer is different if the sale of second hand car 1,80,000. So your purchase price is 2 lakhs and you are selling it for 1,80,000, negative margin, so no GST. Okay. See, this is one like a case law only it is. So see, have a look on this question now. Mr. D, a dealer in goods, sells new brand cars 11 lakhs. He advertises customers can sell their old car if they buy new car from him. One customer exchanged his old car for 2 lakhs. Mr. D sold new car to that customer for 9 lakhs. The Central Tax Department demanded to pay GST on 11 lakhs, where D argues that he is eligible to pay on the difference, namely margin of 9 lakhs as per rule 32(5) of CGST rules. So if you see this problem, you will still get understanding of what is section 32(5). So he is a dealer of what? Selling new brand cars. He advertises that the customer can sell old car if they buy new car from him, and he did the same. He sold to one of the customer the car value 11 lakhs, but he exchanged it, the old one, and he gave 9 lakhs. Now the department says you have to pay GST on 11 lakhs and not on the 9 lakhs. So whether the department is right or whether the dealer is right. Dealer pays GST on 9 lakhs. Department says 11. So who is right here? Why? Yes, but you need to see what is rule 32(5). Rule 32(5) is what? applies to whom? Rule 32(5) applies to buying and person or the dealer who is dealing in buying and selling of second hand goods. Okay, the rule is applicable. Here the dealer says that we are 9 lakhs, but the department says that they have to pay GST on 11 lakhs. So you are saying as per like open market value is 11, right? So here below they have given that he is eligible to pay GST on the difference, namely margin of 9 lakhs as per rule 32(5). The person is saying, sir, as per rule 32(5), I am eligible to pay only 9 lakhs. So he is quoting that rule. So 32 subsection sub rule 5. But the department saying that 32 sections sub rule 5 is applicable only to the dealer who is dealing in the second hand goods. But you are the dealer selling new brand cars. So that rule is not applicable to you. So it is applicable only to the doing the second hand goods. So that you need to see here. So it is applicable. Person is dealing in buying and selling of second hand goods. In the given case, D is not eligible since the dealer sold new car, and therefore section this rule sub rule of 5 will not apply. So if you see this type of examples, you will not forget what the rule 32 sub rule 5 is. So it is with the second hand goods. See, he is selling which car? He is buying the old car and he is selling the new car, not the same old car. So that will not, he is not applicable in that case. So it is also same. I think second hand goods, I think you will be okay. So what is the last one we needed to see here is value of supply of second hand goods we have seen. Last one is value of redeemable vouchers, stamps, coupons or tokens. So in time of supply, if you remember the redeemable vouchers. So if you able to identify from the coupon what are the items you can buy from the coupon when you do the redemption of the voucher. So if you know the items, able to identify it, then in that case your time of supply is the date of the coupon. So if you are not able to identify, so if there are multiple items, suppose from the company if you get a coupon that you can purchase mobile or gas stove or groceries or shirts, pants, anything. So in that case you it is not identifiable with which item you are going to purchase out of that coupon. So the same concept only here, value of redeemable vouchers, stamps or coupons or tokens. So we will see some 2-3 examples quickly. So you will remember. So you forgot time of supply. So if I show example, you will remember now. So redeemable voucher or coupons or stamp. This is sub rule 6. There are many companies who issues vouchers, coupons, stamp on the basis of which goods or services can be procured by the holder, such vouchers, coupons or stamps. So how the valuation will be done? So you can have a look on this particular example. Mr. X had purchased a voucher 200 rupees, redeemable against purchase of a wallet 500 from shopping. Here the valuation should be taken in the redemption value of 500 in respect of the voucher and not the purchase value of 200. So the value of taxable services services provided by notified class of service providers 32(7). The value of taxable services. So wait, I'll show you some easy examples. So if you remember the time of supply, these two things we have seen. So what is 12 subsection 4 and 13? So 12 is for goods and 13 is for services. If the supply is identifiable at that point, then the time of supply is date of issue of voucher. If the supply is not identifiable, the date of redemption of voucher. The voucher has face value 5,000. The holder of voucher purchased goods or services of rupees 5,000. When the holder receives the goods or services against the voucher, it is termed as redemption of voucher. So when you purchase, if you are given coupon and after submitting the coupon if you purchase, then that is called as redemption of vouchers. X Limited, a cloth merchant, sold gift voucher to customer for 2,000 on 10th November. So you can see here both things, what is the time of supply and what is the value of supply. So the gift voucher is 2,000 on 10th November to purchase specific cloth from its showroom. Goods actually purchased by customer on 15th November for 2,400. So what is the time of supply? Because it is identifiable at that point, purchase specific cloth. So he is not going to use for other purchases, only specific purchase. So it is 10th November and the gift voucher is 2,000. So the value of supply is 2,000. Okay. So quickly we'll have finished this. Ram & Co. being a dealer in electronics and electrical items. So 10-15 minutes after that we'll close today. Huh? No break. So you got energy now. Ram & Co. It is also same. The voucher related only. This redeemable voucher 32 sub-rule 6. Ram & Co. dealer in electronics and electrical items issued a gift voucher 2,000 on 15th November. Customer can use gift voucher to purchase anything which is available. So it is not specifically you can able to identifiable. So if the supply is identifiable, if the supply is not identifiable. So not identifiable means the date of redemption of voucher. So when he is going to purchase on 20th November. So what is your time of supply? 20th November. And what is the value of supply? Whether it is 2,000 or 1,400. You may get sometimes that confusion. So the voucher, gift voucher issued for 2,000, but you purchased only for 1,400. So your taxable value of supply is 1,400. That is CGST, SGST. So in that, I think you have pure agent also, right? In that material, in the indirect tax material. Yes. So now we will see about the pure agent related. So pure agent means who enters into a contractual agreement. Pure agent 33. So we have seen 32 the specific supplies. So how we are going to calculate the taxable value for the specific goods or services. Now we are into section rule 33. It is particularly for pure agent. So pure agent means who? The supplier acts as a pure agent of the recipient of supply when he makes payment to the third party on authorization by such recipient, and the payment made by the pure agent on behalf of the recipient of supply has been separately indicated in the invoice issued by the pure agent. So please have a look on the second point carefully. The payment made by pure agent on behalf of the recipient of supply has been separately indicated in the invoice issued by the pure agent. The supplies procured by the pure agent from third party as a pure agent of recipient of supply, in addition to the services he supplies on his own account. So these are the theory which is there in the material also. Okay. So how we are going to link what is there in the theoretical? First one, it is given the supplier acts as a pure agent. Second one, if you see, the payment made by the pure agent on behalf of the recipient of supply. And third one is supplies procured by the pure agent from third party, and addition to the services he supplies on his own account. So how from this, how you will know whether he is a pure agent or he is a not a pure agent? So here we can see from this example how you will treat him as a pure agent or not a pure agent. Mr. X is a customs broker. Issues mostly in the suppose tomorrow if you are running your own company, where you will have this customs broker, you are importing lot of doing import and export business. So you need to take care of the company. You will be appointing some customs broker who will be sitting in the Mumbai port, helps you in clearing the in importing or exporting of your business activities. So here Mr. X is a customs broker, issues an invoice for reimbursement of few expenses and for consideration towards agency service rendered to an importer. The amounts charged by the customs broker are as follows. So you can see the agencies, what are the expenses incurred by the custom broker. He has agency income. So he is doing service on behalf of me. You need to pay some income to him, right? So how much he is charging? Agency income 10,000. His traveling expenses, hotel expenses are also there, and customs duty. So our material he is clearing on behalf of me. So it is customs duty he is paying 55,000. And the dock dues. Dock dues means anything loading and unloading of goods, whatever expenses are there, those are 2,500. So now find the taxable value of supply of service in the hands of customs broker. So how we will be calculating his taxable value of supply? He has his agency income, traveling, hotel, customs duty, dock dues. Are we going to consider all these expenses? See here, only his taxable value is 10,000 agency income, and traveling expenses 5,500, and hotel expenses 9,500. The customs duty and the dock dues are he pays on behalf of us to the customs department. Okay. this is not his income. He pays this amount on behalf of us. So it is like a reimbursement. So that will not be considered in the taxable value of supply. So this customs duty amount, when any import is happened, so I need to pay to the custom authority 55,000, but he pays on behalf of us. So that is not addable. So the GST, that is his taxable value of supply, will be 25,000 only. If you add the two values, then it's not considered as a pure agent then. Okay, so you can see one last example. So see here he is a agent. Okay, this has agency services, unloading charges, transport, other transport, customs duty, dock dues, port charges, his hotel, traveling and telephone expenses. So this agent, he is giving the list, these are the expenses I have incurred. So in the when he raised the invoice, so if I am a pure agent, whatever amount, the purely the customs duty amount is there, which I need to get it from this company, that amount we call it as a pure agent reimbursement. I need to pay directly to the authority, but instead of me, he has paid to the authority and cleared the goods. That is pure agent reimbursement. So same way, if you see here in this particular question, the agency charges, unloading of machine, charges for transport, and this charges is also transport, customs duty, dock dues, port charges. So if you see this last three, so this unloading also there, customs duty, dock dues, port charges. This three we have seen in the previous problem also, the pure agent expenditure. Apart from that, even loading and unloading charges and transport of machine from this port to Gujarat port to the logistics in Ahmedabad, and the loading transport charges are there. These are also a pure agent expenditure. So only this amount is the total taxable value. What happened? So it is matching, right? So that means pure agent mean even in the exam also you will get in the question to calculate what is the taxable value of supply as per rule 33. As per rule 33 is pure agent. So pure agent, you should not show this customs duty, dock dues, port and unloading and the charges of transport and all, because these are reimbursement expenses which on behalf of us the pure agent pays to the authorities. Only his income and other expenses are his taxable value of supply. So in this there is one additional question in the last line. The taxable, the compute the value of supply. Okay, would your answer be different if the logistics charges 13 lakhs as a lump sum consideration for clearing the imported machine from the customs station? So if they say, if instead of giving the invoice, so generally the invoice will have reimbursement expenses and his taxable value. There will be particulars and what is the reimbursement expenses one column and what is his taxable value, he will show it. Like that only generally all pure agency invoices will be. But if tomorrow if he is not going to give you this breakup, nothing, directly for clearing of this particular import of machine, my agency fee is 13 lakhs. So you get only one line in the invoice as 13 lakhs agency fees. In that case, you have to mention he is not a pure agent, because pure agent means how his invoice should be: the payment made by pure agent. See point B, the payment made by pure agent on behalf of the recipient of supply has been separately indicated in the invoice issued by the pure agent to the recipient of service. He should have separately mentioned in the invoice, and if he tomorrow raises an invoice mentioning 13 lakhs as a lump sum consideration, my agency fee is 13 lakhs for so and so import of machines, in that case he is not a pure agent. So this is the different. Yes, his income. Same for everything. We can't go directly to the Mumbai port, because there will be so much of compliance will be there. So if we go directly, it takes lot of time, and if the agent is there, he is full-fledged into that particular job only. So he knows whom to meet, and quickly he will clear all our import or export, whatever our transactions are there. So the agency, whatever expenses he is incurring, then what he will do, he will raise an invoice to us. So these are the charges are there. So in that invoice, he has to clearly mention what is the amount for the customs duty, what is the loading charges, unloading charges, everything. And then separately he has to mention his agency fees is there. He might have incurred the hotel, traveling, that he has to show separately. So if he is giving in a one line, then we have to treat it as a not a pure agent is. So we'll stop here. Last one. 33 done. 34. So rule is today 27 to 31. There is a rule. Only 27 we have seen today. Then till 30th also we have seen. 30th is nothing but you have to prepare a cost sheet. On that you need to add 10%, and then you have to derive the transaction value of supply. That is rule 30. Then we have seen 31A, that lottery, betting, gambling, that is 31A. In 32 we have major 5. 2, 3, 4, 5. So 2 is what? The foreign exchange currencies. 3 is air travel agent. 4 is insurance. 5 is buying and selling of gold car. So then I think mostly covered what? Second hand goods, yes. Buying and selling of second hand goods. All goods it is. It is not only for cars, it is also for machines also. But I don't want to, actually I saved that also in my workings, like this one. But in Inter, I think this is not there. So I have not shared this one. So I will share you the PPT, that time you can have a look. It is not only for cars, it is buying and selling of second hand goods. For all it is applicable. Our illustration is car, so but it is applicable. Okay. Old right, correct. Where is it? But you are paying on the margin only, no? But you see. So if I am a dealer buying and selling old cars or second hand any goods, right? So now we are taking, for example, if this laptop is there. So I bought this laptop is for 10,000. I am selling this to this goods to another person, for example 20,000. So 10,000 I purchased, I am selling it for 20,000. So what is my margin? 10,000. That 10,000 I have to pay GST. You still have any doubt? Huh? Okay, so you are saying very first when he bought, huh? GST is paid. Correct. Okay, but it will not be a cascading effect if you ask me. So that transaction is already over. That first transaction, I bought a new car for 5 lakhs and I paid GST. So after 1 or 2 years, if I want to sell it, so that there is a second transaction which starts. So I sell it, and it is the other dealer will be paying the GST and not me. I am, for me no GST. You are the dealer, you will be paying the GST to the department now. For to the department it will be for to the department it will be when you purchased a new, that time also GST is paid, and again when the dealer is selling that new one, yes. Okay, so this is the last one, 34, rule 34. But it is very simple what we have seen in the customs valuation. It is related to the same only. You can see rule 34 here. Rule 34 says the rate of exchange. So which rate we will be considering? Say we have two dates, date of bill of entry and the date of entry. So we know it CBIC rate only will be considering and the bill of entry date only. So here this example is the same. So the assessable value is 10,100. So which exchange rate we have to consider? Date of bill of entry and the rate notified by the CBIC. So it is 65. So the rate of exchange determined shall be applicable as notified by the board for the date of time of supply, and the rate of exchange, applicable rate of exchange as per the generally accepted accounting principles for the date of time of such services in terms of section 13. Yes, we'll see this one, but it is known case only. Nothing is different here in this rule 35. The value of supply is inclusive of your So you know it, if the material cost is including GST, how you will bifurcate what is the basic, what is the GST. So where the value of supply is inclusive of integrated tax or the CGST, SGST is useful in case supplier may treat particular supply exempted from GST and therefore will not indicate the tax amount in the bill of supply. In fact, it is a taxable supply with GST. So there are some scenarios which comes like you treat that supply is exempted supply. That means no GST on that particular product. Later you come to know it is a taxable one. That time how you will be, suppose if the department asks, it is not a exempted, it is a taxable supply. Then what we have to tell, that amount is including GST. So if you are selling this goods, you can see this particular example. An assessee was under impression his product is exempt from GST. The goods sold at 100 per piece without charging GST. It was found actually the product was chargeable with IGST 18%. Department claimed since goods were removed without GST, transaction value should be 100 and GST is payable. Determine the GST payable per piece. So how we will be calculating the GST? You need to use this formula only. What is the value including of tax? So this is 100. So 100 divided by 100 plus this GST is 18%. So 100 plus 18 multiply by rate of GST is GST 18. So for this particular product, the GST is it is IGST, so 18 by 118. So 15 rupees is GST and 85 is basic amount. So this simple way, in some problems also when they give this value is including the GST. So how you will calculate if they give some numbers like see, if they give this prices including the GST, say 515, the cost or the price, you can say the value is including GST. That means it is 118%. So how you will divide, how you will calculate the basic and the GST separately from here? So this 515 multiply 100 divided by 118. So you will get the basic. So how you will get the GST alone separately here? 515 multiply 18 divided by 118. This is the GST. Same way it is for 100. So 100 means directly it gets calculated here. This is rule 35. So suppose if you get any notification from the department that this product you are not charging the GST, then we have to say as per rule 35 the price is including GST and the GST amount is so and so, and then you need to pay by calculating in this way and pay the GST to the department. So price including GST amount we have to consider. So you can now from in the material you just have a look on those rules and valuation of supply, even that taxes, commission, packages, subsidies, I think we have 2-3 problems here. See simple other simple problems in our material here. See we have in our material also problem number, illustration number 25, 26 and 27. So so this one or what? This one? Okay. This one? 18 by 118. So if you want only GST, you can calculate in this way. Or you know it, our price is 100, you know. If you calculate one number, the other number also you can subtract it. See, in this particular illustration, you are looking for this sum, right? This problem, right? You got it or what? So if you find one number also, it is fine. Which one will be easy for you? Say for example 100 is there. You find this basic value, that is 100 divided by 118. In? Okay. It is there. Very simple small chapter only it is. ITC is there. So even if you calculate in this two numbers, any one number if you calculate, no, so you can find the other one also. Which one? 4B. This is there is only theoretical, even final also there is no problem. That's why I have not shown anything. This one, right? So 10% of single premium charged from, this is only on the theoretical only. You need to have a look that single premium annuity policies if it is not covered above. So we were having only this. Even in this chart also, when I have shown, it is there actually. See in this one, rule 32 4B, that single premium annuity 10% of the premium is taxable. See, we need to please have a look on this three problems, illustration 25, 26 and 27. So if any doubt, please let me know. It is whatever we have seen, the same only here, because you have TCS. So TCS means while in the taxable value of supply it will not be there, but when you raise the invoice, that time the amount will be there. But when you calculate for GST purpose, you will not consider that TCS amount. That you should be while taking the numbers, you should have a look on those things. See this one also again, that discount of 15,000 which was not as per the agreement. So that means in your taxable value, that discount you will not consider. The receipt from the NGO, this subsidy was not linked to the price and not considered in the list price, so it is not there. So we'll stop till here. So any doubt, so please have a look on those main one, so you will not forget also, and you can reach me anytime. I will see for the because insurance policies I have seen in some question paper, so please have a look on those insurance policies 32 sub rule 4. And even in the final level, the buying and selling of second hand goods, that question has been asked repeatedly. So please see buying and selling of second hand goods and this insurance policies. And if you see today, no, you will understand easily that foreign exchange currencies, insurance, and these things. So at the time of revision, you can have a look one more time, so you will not spend more time for revision also. So we see this problems 25, 26 and 27. So we'll stop here. Yeah, those who are in online, please let me know whenever any doubt is there while you are revising. We'll solve those queries, and we will connect in the next class. Thank you all. Thank you.